Hello, thank you for attending. This is Seewing Yi from the Yi Real Estate Network, and the title to this presentation is Skyrocketing Rents Has Boosted This Housing Market. So without further ado, let me share you my screen here, and here we go. All right. Anyway, this is Palm Bay, Florida, also known as Space Coast. So I always start off my video presentation with this high-level information, which is income property is the ideal investment, is history's most powerful and proven and tax-favored multi-dimensional real estate asset class. Why? Because you're not only getting your cash flow, your positive cash flow at 25% down payment, typically on a rental property, 1 to 4 unit, ideally single family home residential investing is the best in my opinion. Of course, in addition to passive income and cash flow positive, investors get depreciation and other multiple of tax benefits. Of course, historically speaking, you get appreciation over time, right? And then finally is leverage. You're able to finance the loan by only putting 20 cents to the dollar, and the mortgage lender will assume most of the risk. So by getting leverage, by getting an investment loan to purchase your property, you're able to make your money work harder, get a higher return over time. All right, so that's pretty obvious. All right, so let's go over the Palm Bay Space Coast market. As you can see, all I know is Palm Bay, which is an hour east of Orlando Metro, has been one of the fastest growing area, not only in Florida, but in the country, as one of the metrics is done by U-Haul, stating that Palm Bay is ranked number 3, I believe, last year in terms of people moving by U-Haul into this particular market. And of course, the benefits of buying right now at a moderate cash flow. I'm going to show you a 3 scenario of a particular property here in Palm Bay. I'm going to show you a scenario. Is all illustration, right? Of last year, 2021, this year, 2022, and projecting into 2023, 2024 on this particular property illustration. All right, so you can see right here, last year was a lower rent, lower price, and this new construction home this year is the actual list price is this amount, and with the rent showing this amount equal pretty nice cash flow, as you can see, right? And then you buy it today, for example, you're gonna achieve equity growth, cash flow accumulation, principal pay down by the renter, and then even more rental rates growth down the road. So, of course, and in the year 2024, even though you're buying today at 5 to 6% mortgage interest rate as an investor, then it is anticipated that in the next few years, the interest rate should go down, at least we hope. And then when and if the interest rate go down for investment loan rate of approximately 4.75%, I'm just guessing, in the next few years, you have the ability to refinance your current interest rate on your mortgage, and so you can get even more cash flow. I will illustrate that throughout the rest of this presentation. Needless to say, because of a rising home prices and a rising mortgage rate, we are getting we are achieving 40-year home affordability low. So what I'm saying is a lot of people are home buyers, primary home buyers, are sitting on the sideline because they, for various reasons, they are unable to qualify. So people making very decent amount of money all over the country, they're sitting on the sideline because of the factors we just mentioned. So, and at the same time, that causes more people than rent than ever before. And of course, there are lack of housing to rent, houses to rent all over the country. So we're getting amazing amount of rising rents. The landlords are raising their rents in a double digit, even in a triple digit rent increases in different part of the country. As you can see by this chart only goes up to March 22, and we're seeing a 14% average rental rate increase. But in different markets, it's even higher, as I'm going to show you momentarily. All right, and here in the Sun Belt has the highest rental rate increases in Florida. Orlando, which is very close to Palm Bay, has year over year, according to Realtor.com, has increased a whopping rental increase of 35%. Miami even higher, 55% rental increase. As you can see, the median rent, which is mind-boggling. Austin, Texas, 28% year over year rental rate increase. And just to go over the top areas, but we are focusing only in Florida because we have a builder that are building new homes for our investors only. It's built to rent business model. CBS News recently has shown that Florida has one of the largest rental rate increases, triple digit, if you will, all over Florida, especially Central Florida, Palm Bay, and Tampa, and South Florida, and Southwest Florida also. Because of the epic migration, people migrating from Northeast, and people migrating from the Midwest, people migrating even from California into Florida to live, to retire, to work, the whole 9 yards. And the lack of homes to buy and to rent, and too many renters or renting instead. So that creates tremendous amount of rental rate increase pressure. So which is very good for real estate investors, right? You all want cash flow. So now this, I'm about to show you again, the disclaimer is, this is just a educational presentation, right? I mean, everything is all hypothetical. It's all just an illustration. So you have to do your own research and due diligence to validate my information. And of course, consult your financial advisor, consult your tax advisor to go over what's best for you in your unique situation. All right, this is just a high-level educational presentation. Now, this case study, this pro forma I'm about to share with you is based on 2021 last year pro forma. So, and here it is, and this is the property that we are presenting. This is a pre-construction property. It'll be finished constructing in about 6 to 8 months, perhaps, or depends. This is an off-market opportunity in deconstruction. It requires 25% down payment from construction to permanent loan scenario. We can talk about it if you contact me or my turnkey network provider in Central Florida, Ms. Jean Gillum. She would be more than happy to give you a lot more details than what I have. But this is you buying a lot, you could reserve a lot. Then you set up, you pay the contract price for today, which is $249. But this property a year ago, this 3-bedroom, 2-bath, 1,350 square foot, a year ago would only cost you about $200,000, and it would have rented for $1,800. Since a year ago, the interest rate, amazing interest rate, even for investors, are at 3.5%. Someone would put 25% down payment last year. They would have a monthly net cash flow of a whopping $666, which is amazing, right? Very high, almost 1% rent to value ratio and 8% cap rate, which is amazing. But however, this is this year. This is the year 2022. We're in the summer of 2022. So I'm going to show you the pro forma per right now. This is the houses that are available for real estate investors. It's not available to the public because our builder, specifically the local builder in Central Florida, are only constructing these homes for our real estate investors at a discount price because of that's the deal that you're getting. You're getting a 20% below market value at right now at 249. Yes, 249K, 1350 square foot, 3 bedroom, 2 bath. You put 25% down payment, which is total out of pocket 66,280 at an interest rate of 6%. Very realistic interest rate, right? And even then your gross rent of 2,300. Yes, I will validate this to you as well through my research. The rental monthly rent is 2,300. Okay, I kid you not, and I'll show you momentarily how I come up with this number. But when you're all said and done, your gross rent minus your debt service, which is your monthly mortgage at 6% interest rate. Hopefully it's going to be lower. We'll talk about that momentarily. So your monthly mortgage is $1,120. Your monthly taxes is $250. Your monthly insurance $75. Your property management fee of 8% is $180. And we also factor in 2% vacancy factor, and then you still have a monthly net cash flow of approximately $629 at an 8.4% cap rate, which is amazing, and almost 1% rent to value ratio, which for the past few years you're not going to find it anywhere, especially a new build property, which normally command higher rent than a resale. But having said that, here's some of the validation I have. By the way, a neighbor comp, I don't know how far away, from another builder, new construction, could be a few miles away, could be 10 miles away in Palm Bay. A little bit higher square footage. Our square footage is like 100 feet less than this amount. 3 bedroom, 2 bath. Another builder is selling for $330. So I don't know whether this is a pure apple to apple comparison. We're selling our model for $249, and a competing builder is selling for $330. Maybe they have more amenities. I don't know. It doesn't matter. So you see the discount that our investors are getting from this builder that we work with, okay, exclusively. Now, you want some validation? I just told you, Florida, nationwide, we're seeing a rental increase which have never seen before for the reasons we just stated. And you look at the most recent rental comp, July, right? Just this month, right? We're seeing June. Okay, June, a similar square footage is renting for $2,175. I don't know whether this house is a new build or a resale. Most likely is a resale. So our new build usually command higher rent on a comparable basis than a resale property, right? I'm sure you agree. Let me show you another potential comp. Over here, this house was rented this month, July 2022. Just a 200 square foot larger is already renting for $2,270. Let me see what else. I think that's all I can show you. So you get the idea, right? You get the idea that by the time this house is completed later this year, and then the property management will help you rent the house out, it might be higher than the current rental rates. Again, because of the trend in that, with the inflation being so high as it is, at 9.1% officially, when the inflation rates are high, the rent increases, right? Same thing with recession. Whenever we have a recession, prices increase, cost of living increase, the price of goods increase, and the rental rates increases as well. Given that there are so many renters out there, we are becoming a historic renters nation. Now, I'm going through another projection, and again, no one can predict the future, but in 2023 to 2024, let's do a pro forma for that on this very same house. Giving So it behooves you to buy, to lock in today's price, which is 249 on this particular new build model in Palm Bay. However, then lock it in, then hopefully we have to believe that the interest rate is going to be lower than it is right now, right? I mean, especially when the inflation has been stabilized later this year, next year, and the year beyond, we have to believe the interest rate is going to be lower. So you lock into this price, and then at whatever 5 to 6% that you are paying right now, and still getting pretty decent cash flow on this particular house. But what if you're able to get refinance in the future, next 1 to 2 years or 3 years at 4.75%, which could happen. So you do refinance because your mortgage payment is a lot lower. At the price has increased as well, obviously, because you walk in at below market value for the reason I just stated. So let's say in a few years from now, the market value have increased from 249 to 300,000, and then you can refinance at 4.75% instead of your current mid 5s or 6% mortgage interest rate as an investor. Then your cash flow will increase even more to a whopping $755, which is truly, truly amazing. I challenge you to find any other rent price of a new construction home in one of the fastest growing area in the country, Palm Bay, Central Florida area, or maybe not, almost Central Florida. Giving this value, that's the way it is, right? I mean, that's what you can do. All right. And finally, and here's the action plan, right? So you buy now at whatever interest rate, 5%, 5.5%, 6%, 30-year fixed rate mortgage for real estate investors out there. So you buy, lock in the price. The price is a very good price under the situation. So meanwhile, the next 2 years, you will enjoy your equity appreciation. I think, the experts all agree that the appreciation is not as high as recently, but still, because of the supply of homes are still very low, and the demand is pretty high still. We expect a little bit of equity appreciation on a short-term basis, and then you can still collect your relatively small monthly cash flow accumulation, and then you have your renter paying down your loan, right? And meanwhile, you're getting the tax benefit of being an investor owner that you are. So put 25% down today, get the small cash flow, moderate cash flow that is. And then in the next few years, once and if the interest rate goes decrease, then you can do a cash out refinance because the rental rates are lagging behind the skyrocketing appreciation. So at the end of the day, right now is good time as ever, as long as you find the right turnkey provider, the right market, the right team to help you, and we can do that for you as part of the Year Real Estate Network. So you have access to this great information. And I know, all you gotta do is focus on your action plan, ignore all doom and gloom out there, misleading information. The sky is not falling. As a real investor, if you find the right market, the right location, you can do very well regardless of whatever happening out there. All right, thank you so much for your time, and I look forward to working with all of you, and you can get everything you want on the other side of fear. All right, thank you so much. This is Seewing from the Year Real Estate Network. Have a nice day. Bye-bye.